afternoon, everyone. Glad to be here. And yes, thank you so much, Shayla, for introducing me and inviting me to this wonderful opportunity to just share how businesses obtain credit. And just as an additional background, even during this past year, we've all had to kind of transition and learn how we can be agile, right, during this time and switch our mindset. And along with BBVA and other, financial institutions, resources such as yourselves and SBA, we, wanted to give back to businesses. And so this is just one of the great ways that BBVA does is, providing financial literacy. I have many counterparts with me, so feel free to chat in and answer some questions, counterparts, from a branch retail executive that handles those initial businesses, startups. And then I have, SME, so it's a small, middle, emerging market where they're handling a little bit bigger as far as revenue type. And then, of course, just other individuals such as workplace solutions, such as what I do as well, and working with the employees. And so today, I'm really excited to share with you all on how businesses obtain credit. And again, whether your business is starting out or it's in its growth phase, you already know how important credit is to your businesses. And, as I start out in just statistics here, according to research, almost half of all small businesses do not apply for financing. And of those small businesses, 16% stated their reason for not applying was the belief that they wouldn't get financing. And that, to me, when I hear that, it's like, wow, imagine a startup and wondering, okay, there's no way that I'm going to get approved and all of that. So having resources such as, the Greater Women's Houston Chamber, having a financial, even personal, speak to them and ask them, hey, do you all do businesses, and put me on the right track? Having that guidance, right? So let's go ahead and get started and go over what we're going to go over. I will say this is an open forum as far as chats, so feel free to chat in when you have a question. At the end, I'll pretty much do the presentation, how it's going to go through, pretty much present, and then at the end, having any questions, it can be an open conversation dialogue. Shayla, thank you so much for sharing your screen and doing this for me. So let's go ahead and get started and go over our goals. Yes, so goals. So in this workshop today, you're going to learn how small businesses build and maintain their credit. We're going to explore how creditworthiness is measured for small businesses. We're going to examine the connection between personal and business credit. One of the main factors in going over a business credit is to make sure that you personally have that strong credit worthiness as well. And then we're going to briefly identify the documents that you'll need for a small business credit application. And I'm really, again, glad that I have a branch retail executive, just in case any questions come in, because they're the ones receiving those applications and they have that knowledge there. Okay, let's go ahead and dive in. So lenders consider several factors, right? When they're reviewing that credit application, they're taking a look at a couple of things. So have you paid past financial obligations in full and on time? Has your spending been prudent and within your personal budget? Do your habits over time reflect financial responsibility? And do you have stable personal income or business revenue to pay all your financial obligations? And has your business been in existence and generating revenue for a few years? And, even on this one, there's resources, even if you're a startup, you have the opportunity to not only use your own liquid cash or capital, you have the ability to possibly go out and get like an investor or someone who can believe in that business plan. But you have to make sure that you have a strong business plan and that almost like that passion, right? Just written all on your business plan. Do you have a history of follow through, such as staying at a job or building your expertise? So the reasoning, right? I've even spoken to someone who has reviewed that business credit and they want to know why. What puts you in this business? What's that passion? Did you work in this industry for such a long time, or did you volunteer and now you're breaking out and doing that business on your own? And so now you have the not only the grit, right, of working in the front line of that industry, now you're creating that business plan and wanting that credit through. So let's go through into the next page. So there's 5 C's when considering 5 C's of credit when a lender is reviewing that application. So capacity. It is your personal ability and your business's ability to repay a loan currently and in the future. And so think about it. So is your business or has your business shown sufficient profit? Are they receiving some current orders, some business? Is it a startup? Have you already maybe broken out into some shops? And so it's a continuous cash flow. What does that look like, right? Capital, the funds that you yourself have personally invested in your business, including profits that have been retained in the business. So once again, capital, how much have you invested in this business? How much of your actual money have you invested? What does that look like? The amounts, all of that. Collateral. So any personal or business asset that the lender can take in case you cannot pay the debt. That would be vehicles, real estate, equipment, anything that has a value and has an actual collateral certificate, a deed behind that, because that then in turn turns into profit to that financing. So you could possibly hold the collateral there and strengthen your application. Okay, the next one is character. Your personal and professional history of delivering on commitments. How do you pay your financial obligations? What does that look like? Are you, how is your credit score? Are you having good capacity in your personal credit as well? Do you have 30? Are you maxed out on all your credit? Are you paying your bills on time? All of that. And conditions, the purpose of the loan, and also the financial prospects in your industry, the economy, any other external factors that might affect your business. And when speaking, I've once again spoken to an actual credit analysis when he's like reviewing it, and he's saying, what opportunities or risks does your company face? What are the trends? Are there similar competitors around? So if you're planning on building, let's say a brick and mortar, or you're going into a strip center and you're looking at your business, who's next to you? And I have even heard that if a bank such as, let's just say us, BBVA, has lent out to possibly your neighbor that may be your competitor, the application may not get approved because it's a risk, right? They've put into this loan in this business and now you're here. So you really looking at where you're putting your business is big as well. So the demographics of it, the market trends, all of that. So that is the 5 C's of credit. Believe it or not, it is, a whole picture of it, and making sure it's strong as far as, your personal character, to make sure that you've kind of done that check mark, and then your business has that personal characteristic behind it as well, which is the business credit. Let's move on. And there's making sure there's no chats. I've kind of moved the little mouse here, making sure no chats are coming in.
I have a question for you, Arlene. What if someone doesn't have a lot of collateral? What would you suggest?
Collateral can be also as far as if they don't have a home, maybe their personal home, they can do the home equity. So pull out the equity on that. They can do collateral as far as cash. So, cash in your or stocks, bonds that they've had. They can go off of that. Gabriel, I don't know if you can chat in any on the additional as far as collateral, if someone doesn't have the following of what I've stated. You can chat it in, or you can unmute yourself.
Yeah. So collateral is not always required, depending on the type of deal. If a business is just looking for a term loan, maybe for a cash injection, there wouldn't be any collateral involved. But we would look at, the strength of the borrower, make sure that, the business cash flows, they have some liquidity. Because other deals will be tied to collateral. If they're buying equipment, that equipment will be collateral. If they're buying a building, that building will be collateral. Hopefully that answers your question.
Yes, thank you.
That's a good ad. Thank you, Gabriel.
You're welcome.
So as we go through and we've spoken about the 5 C's, we're going to do just a high level overview on a case study of Jovina. She's a 46-year-old entrepreneur who wants to expand her small sewing business. So right, she started the business as a hobby from her home. That's pretty standard. You have to have that passion, and began selling to her friends and family. 2 years ago, her daughter made a website for the business. Sales skyrocketed. Jovina was able to start paying off her personal loans from the income. Jovina has 3 credit cards, 1 business and 2 personal. She pays her credit cards and her personal loans on time. She always pays more than the minimum balance, but she has never paid off the debt in full. She owns a car that she has had for 8 years and rents an apartment. She hasn't had any other employment since having her children 15 years ago. And so if we go into the conversation as far as what stands out, so let's go to the next one. So let's consider Jovina's credit card history. Which of the C's will give her credit card history effect when a lender's considering whether or not to give her a loan? And so if you think about it, both capacity and character may be affected. Jovina's credit history of repaying loans and credit cards on time reflects positively on her character. Her capacity is limited because she has outstanding balances on her credit card. And remember, I mentioned that she doesn't pay them off. And so that could be an impact. And if we consider the number of assets of Jovina, which she owns, which of the C's or C will her asset ownership affect when a lender is considering? So the collateral, she owns her car, so she could put that up if that was of need. But as Gabriel has stated, at times that's not something that would be needed. Or maybe even, it's almost like that small entrepreneur, they have that imagine of a brick and mortar. Well, they would look at, okay, what's this building size? What's the value back? What's the collateral worth on this and go from there. That would be definitely, longer in the her being in business, right? How might Jovina's employment history affect her credit worthiness? Don't know if anyone's able to chat this in, but how might Jovina's employment history affect her credit worthiness? So employment, it could affect her capacity, which could be limited depending on her income history and her ability to repay past debts. It could also impact or be affected as far as her character. It just depends, right? So she hasn't been working. Does she have that? Is this the only type of income that she has? So she doesn't have maybe that 401k or that savings on the side, right? That liquid cash. And how might her personal loan debt affect her credit worthiness? This could also affect her capacity and character as well. And it could be based on the capital that she has ability to invest. She doesn't have enough capital, so she doesn't have enough to invest in. So that's just a little bit of an overview. Again, I imagine what all the business owners, from 2020 that they started 2020, Happy New Year. I have this business plan. Everything started. You're tracking going into month 3, and everything shuts down. But on the flip side, imagine what it could have given to your business if you transitioned, if you aligned with the times. I'm thinking of the daughter that went straight to the website and started, the website and sales started skyrocketing. I'm just thinking of all the businesses that really flourished even during the pandemic because they just really push themselves to say, I have this need, I want to put this in front of people. Let me switch over into a different mindset. So dropping off the door, right? A doorstop business or a pickup, anything like that. The boutiques are just shipping. Maybe her shipping increased as far as how much maybe she didn't budget that she was going to be doing a lot more shipping, but the people, what were they doing? They were sitting at home shopping online. So make that website pretty, make that website, almost like a 360 view of your product so that people can see it. I'm even thinking of like the glasses, different glass companies. You could take a selfie and see the glasses on you without even having it, right? And so that's, a different way of thinking, and then really positioning your product in someone's hands without being right there in front of you. So that's during this time, just hearing all the way that the business owners reimagined their business plan, right? So let's move on to the next screen on
Arlene, before we leave her, so this candidate here, so right, Jovanna, is she a candidate that you would be able to help get to the next step to reach her goals at BBVA?
Well, on the branch retail executive side, so the retail side, I could see happening. And again, Cheryl, you can chat in. I know you're on chat. Cheryl's a branch retail executive, so she is at one of the branches that would be getting maybe Jovina to open up that a small business account, the credit card that she had, right? So if Cheryl is speaking to Jovina and has that business credit card, and Cheryl's seeing it from someone else, she'd be like, hey, we have this business line of credit, possibly. We have this business credit card. Let's get you, speaking here and that. And Cheryl, I knew you would chat in. So yes, we could look at a small business line of credit and a business credit card to do a balance transfer. All of that would be able to help her. And I agree, helping with really being that go-to person. And so that's the wonderful setup that we have. Not only do we have Gabriel even visiting like a territory, so a couple of branches. So Cheryl would know Jovina, see her through her passion, her deposits, all of that. It could go into a different amount, and then Gabriel handles that. So, all of that is right there at our in our branches and with our great retail staff.
Okay, great. Thank you.
Mm-hmm. So through other considerations that lenders are reviewing, again, remember I mentioned that passion, speaking to, he's over BBOs, which we call business banking officers, or BBRMs, relationship managers. And he stated, I want to know that passion. And so Gabriel and, Cheryl, they want to have those conversations with these business owners on what puts you to create this business plan and put this product out or this service out, right? So background or general questions. Thinking about also management and employee questions. So do you have a payroll? Do you have a board? Who are those stakeholders involved in your business? Business operation questions. So that would be possibly how are you operating? What does it look like? Who is your products and services that you provide? Are all these lines of businesses profitable? Who are your clients and how many do you have? Is it only one thing, right? Do you maybe possibly, are you a business owner of a gym, but then you have gym clothes? So that could be possibly two industries, right? Not only do you accept people to work out with them, but you also have a business line of clothing. And so that's 2 lines possible of income coming in. And then, of course, the financial questions. How, do you have 2 or 3 years of financial statements plus interim of the current year? Do you have 2 to 3 years of business and personal tax returns? Is your business profitable, and for how long? All of that is just a think of Shark Tank, right? They immediately want those numbers. How long have you been in business? Patents as well. So personal questions such as legalities behind it. Do you have a patent? Are you the only one doing this type of service, or who are your competitors? And then personal questions would obviously be about credit. How long have you been in business? What's your personal financial budget? What sources of income are available to cover your living expenses? Because most lenders will provide a personal financial statement for you to complete. And so not only do they want to know your business financial side of it, budget, but also yours. How is your personal credit? Are there any discrepancies that need to be explained, such as a divorce or medical issue? So really personal. And I think on this situation, I think of my sister. She actually started out with a mini mobile service. And just the other day, so I believe we're going on 3 years with her little mini mobile. She's a bartending service, right, with a cute prop. And she's already talking about going, she already bought it, a number 2. Because of the demand that she's had. So think about it, the business are wanting, baby showers or bridal showers, all that, but then she could only do 1 at a time. And so she got up to the point to be able to buy out another little mini mobile service and possibly have 2 going on at the same time. That right there. So not only does she have the equipment, now she has, the ability to get an additional, so that's additional stream of income. It's crazy because she immediately said, okay, I need a business account, right? Because she had set up her LLC and all of that. So she had all that. She comes in, I walk her into a BBVA branch, and she opens up her first business account in her own. And the other day she was telling me, I'm buying a number 2, right? Number 2 mini mobile bar. So she has Sarita, which is, her specialty is sangria. And then now she's having margarita. But more like the Italian pizza, and that's the way she's spelling it. And she's going to do different, right? So she's going to do either a coffee bar or some. So see, she as a business owner, she's thinking wide. I don't want to do only alcohol. I want to do more than that, right? So setting up coffee or maybe a flower shop or anything like that. So really thinking wide. As far as long-term as well, and imagining your business even just growing and really expanding to your audience and who you can outreach, right? So yeah, let's go ahead, or if you have any other questions. No other questions? We can move on to the next. So how do you find your business credit score? So there are business, as speaking through on the actual credit, there's a business and of course personal. And so business is done in Bradstreet, Experian Business, and Equifax Business. And I did hear that there is a cost if you're wanting to get that DFB number for your business. So correct me if I'm wrong, Gabriel, but I did hear from another commercial wealth individual that could possibly be a cost very similar to the FICO. On the FICO personal, you can get your annual credit report yearly, but in order to get your actual FICO score, there is a little bit of a cost. So on that, there's also FICO Small Business Scoring Service, which pulls from your personal and your business credit scores. How are they similar? Both business and personal credits are used to decide if a business or person is worthy of the loan and will repay the loan, okay? And how are they different? Where they draw the information, the scores, and the ranges. So, of course, on the personal side, it'd be 300 all the way up, and depending on the Duns and Bradstreet. Trying to look it up. I believe that there's a scoring system on there. So again, reasons behind it would be that would impact the score would be late pays, slow pays, maxing it out, all of that. Very similar to the personal side, it'd be on the business side. So if we want to move on to the next one. So what is in a business credit report? So business and organization information, SEC filings, credit history about the assets. So if you bought any equipment and put it on credit, then it's there. Maybe you bought it from a company and you're paying it off. Additional business ownership, commercial credit score, and potential risk for failure. And if we move on. Steps to good credit, which we all know that if we pay the bills in full and on time, keep credit card balances low. Looking at on the personal side, 8%, 10%, owing on it and below, you'll have that capacity really increase, and so the score obviously will increase as well. You want to ensure that your financial statements for the last 3 years record is healthy with good, healthy financial behavior. Maintaining good credit, have and use a business credit card. So once you use the business credit card, and you want to think of the way that you use credit as far as business credit cards. So let's just say, for example, you have a business, just throwing it out there again, a spa, right? So you own a little spa place, esthetician place. So if you're out of coffee, a creamer or something like that, do you want to use your debit card of, the cash on hand to go use it, or do you want to use your credit card? What is going to return, as far as profit to you? Or buying a state-of-the-art equipment to do a hydrofacial that is going, once you promote this hydrofacial, you're going to get all these bookings. It's additional. So using a business credit card as well can be using it strategically so that you can get income back, profitability back into your business, and not just paying on interest on something creamer that you could just use your debit card. Now, again, I will preface this by saying if it's something to where it will bring in it's what sets you apart on your business, then by all means, right? So if that coffee is something that, you want to have state-of-the-art coffee cappuccino, then maybe it's at a different cost. Then, okay, that's your business plan, that's your niche, right? Then, again, I'm doing it very basic example, but thinking about it that way as well is almost like strategic, how you're using your business credit card. Receive a data universal numbering system, which is the DUNS number. Subscribe to a credit reporting service and ensure information is accurate and up to date. Making sure that if you have equipment, making sure that you've purchased on, and seeing if that is going to report to help you on your business is pretty strategic and helping you as well. Borrow from lenders who report to the business credit bureaus. Establish trade lines with vendors and encourage them to report your good credit behavior back to the credit bureau. So using the ability to have maybe a delivery service or a contract, right? So if you're a lawn service and you have this constant equipment or this commercial company that has you on repeat to do their commercial lawn and all that, so that would be good. We can move on unless there is a question.
I have a question. So would you recommend that a small business open a business checking account and get a business credit card and use all of their expenses on the credit card and use the business checking to pay the credit card off? Is that what you're recommending?
I mean, that is, Gabriel, go ahead.
I would recommend, when a small business client opens up a checking account, apply for that credit card. and revolve that credit card. If you're going to use it, make sure you have the intention to pay it off. Not only does it help with cash flow, when you use a credit card, you're keeping cash in the account. You have 30 to 45 days to pay that card off without paying any interest. That allows you to build business credit, but it also allows you to have cash on hand. So usually when I'm recommending a credit card to a client, it's for revolving purposes. If they're going to use it and hold a balance, I make sure they go into a credit card maybe with zero interest for a few months, and then with the intention to pay it off, when that zero interest is over. But yes, I would recommend a business credit card for every client.
Love that. Thank you so much, Gabriel.
You're welcome.
And I see here, it also helps the client build business credit. So Cheryl's adding as well, it also helps the client build business credit. So business loan application checklist. So now you have that need. You want to be able to know the business loan application, which could be overwhelming, right, at times. My suggestion, and I'm sure everybody, even from Gabriel, Cheryl's, and even yourself, Shayla, is to always, if it's too overwhelming, sit with someone that can help you organize everything and making sure that you have it, so that there's not this, back and forth, right? And so if you've already maybe possibly applied for a business loan, you may be familiar with the process and necessary documents. If not, then you have this checklist here. And so you want to make sure you have the business credit application. Nowadays, it's not even in paper, it's just an online application. You want to know a personal credit report. So you want to know it. Typically, financial institutions will run it, so you don't have to bring it in. Personal tax returns, I have seen files at the branches, and I've processed documents, so people bring them in. As they were mentioning, 2 years, and then the interim of the current year that you're in, which is, so think about it, as you're growing your business, yes, you have the startup that is you, and maybe that branch manager that's helping you and guiding you through the application. As Gabriel stated, always attempt that application starting out. But if you are going into that next, as far as that revenue, all that, you want to have those resources. So you want to have a good CPA, if not, a friend that is a licensed CPA that can put you in contact with maybe a good resource, such as a software technology, something that can organize your taxes and being able to have that business tax return and along with your personal tax return as well. Most chats coming in. So most webinars I've been on, business plans are a must. I see on the business loan application checklist is optional. Please expand on this. Okay, well, that's at the end. So let's see here. Personal financial history, collateral information, which we've spoken. I'm going to get to that, Nisha. The collateral information, which would be any deeds or anything like that, sales contracts, purchase orders stating, hey, this is the orders that are coming in. No, it's okay. Business lease or loan agreements, so anything that you have out there, any business licenses, patents, any of that. Disclosures, you own other businesses or your business has partners. And then business plan, which was the question that came in through the chat. So business plan. And I'm going to kind of pick through on Cheryl first, because she kind of is that branch retail executive that would be more so on a startup. So Cheryl, have you had to request a business plan? Because on our end, we have it. It's a plus, not required. And a business plan, of course, a quick overview, really goes into, your mission, your vision, your product, your service. What do you do? Your stats, financial, growth, all of that. The next one, yes, Cheryl, I was going to say, typically on the branch retail side, maybe a credit card, I wouldn't see a business plan. It jumps more so on Gabriel's end, on his kind of revenue size. So Gabriel, can you shed some light on Tanisha's question of a business plan on being optional?
Yes, we don't require a business plan at BBVA unless it's a startup loan that we're working on. If it's a startup loan, we do want a business plan where the client can kind of describe, what the business is going to be doing and how it plans to grow. But if it's a request for an existing client, we're not going to require it. So I'm assuming that's why it says a plus, but not required, because it won't be with BBVA. And I would say that's probably across the board with other institutions too. Usually a business plan is going to come in for a startup business. I hope that answers your question.
Are they, Gabriel, I guess let me add additional, are they looking, because typically a business plan is sharing almost like that vision, right? And so
Correct.
Is it for startup, are they wanting to know, okay, how are you planning on the financial growth, or, the revenue side of it? How much are you planning on making, right? And so that business plan, you've done your data research and analysis on it.
Correct. And usually with the business plan, you'll have projections and things like that for the business. And that's why it's not always required, because an existing client coming in to request a loan, typically we're gonna land based on their historical performance, and that's what we're gonna look at.
Yeah. And on the startups, they're looking at what is maybe the business's future growth and any industry challenges or trends or anything like that. So you've kind of done your research on that.
We want to make sure the borrower understands the business they're getting into. That's where the business plan will come in play.
Yeah, that's great. And thank you, Cheryl, for adding that as well. For startups, we use SBA. So, another question. Great, Tanisha. So what do you consider startup or existing business? And you mentioned current client.
I'm sorry, and I'm trying to type this all in.
Oh, it's okay. Tanisha, let's see. Yeah. What do you consider startup or existing businesses? Okay, so Gabriel, Cheryl, I'm going to kind of, for existing customers, we use 2 to 3 years of history in business.
Correct. For existing clients, we consider at least 2 years or more in business. A startup, we consider 2 years or less. The startup, usually it's a business that's starting off fresh. Because we'll also do loans for clients that have been in business for 1 year, but it has to be a strong first year. But a startup is pretty much anyone under 2 years in business.
Mm-hmm. Mm-hmm. And when you say strong, we're obvious, right? Like income is coming in, you've made a good amount of profit within a certain amount of time.
That's correct. That's correct. If you're going to apply for lending and you haven't been established for 2 years, we want that first year to be profitable.
Mm-hmm. Where do loan amounts fall in these areas? Oh, okay. So are you saying how far in the branch retail and then going over to Gabriel? So Gabriel, what is your, as far as loan amounts that you handle?
Okay, so I'll start off with a startup loan with BBVA. The minimum loan amount is $350,000, only because we have to use SBA, and that's our minimum for a startup loan with BBVA. But we do have loans as small as $10,000. Anything under $100,000 with BBVA, it's a simple application. We go stated income, meaning it's just the application. We're going to check the borrower's credit score, the business credit score, and the debt to income ratio. Anything over $100,000 with BBVA, we do require 2 years or more in business. So we can go anywhere as low as 10,000 up to 5 million more, just whatever the business can support. But keep in mind, for a startup business, the minimum loan amount will be $350,000. Anything under that, we wouldn't be able to do.
Very good info. I hope that answers your question, Tanisha. That's where I was thinking that you were asking loan amounts and where did they fall.
Yes.
Very
thank you.
good
And
question.
Thank you. And my apologies. I am jumping on late. So if some of this is repetitive, again, my apologies.
Oh, no worries.
No,
Welcome, Tanisha.
No, it's great info, great, and I'm so glad Gabriel and Cheryl are here chatting in as well. So they're the experts. So we're here to provide you great info. So keep it coming.
And she had one more question I don't think we answered about current client, meaning a current BBVA business banking client, or could it be a personal account client? What does a client mean in this case?
And you mentioned current client, you mean current banking client. So Tanisha, can you go into further? Maybe I missed that.
When Gabriel was speaking, I heard him say current client or something like that. So, and I know in some instances with loans, you have to say, for instance, I'm with Chase, preferably they would prefer to give their business loans to their current business banking clients if you already have banking with them. Some banks that I have encountered or researched, that's where they want you to be a current banking customer.
Mm-hmm.
And so I heard that used here, and I didn't know if that meant the same thing.
We here at BBVA, we'll do loans for both customers and non-customers. Now, depending on the loan request, if it's a larger request, upon closing that loan, we will require an account, but you don't have to be an account holder to apply with BBVA.
Okay, thank you.
You're welcome.
And other financing. So SBA financing, it's a loan from a bank, and SBA guarantees a portion of the loan, includes mentorship from SBA and help for borrowers to qualify for good interest rates and financial plans. Enables borrowers to obtain loans up to $5 million. So these are just resources, right? So additional resources if that financial institution because we actually partner up with the SBA. So to help small businesses that may not qualify for a traditional loan, it is a government program reducing the risk for lenders by providing a partial guarantee if the business defaults on the loan. It's always good to ask lenders what programs they offer and if you may qualify. So some characteristics of an SBA loan is it is a loan offered by the bank and participates in that financing. And the bank makes the loan, the SBA guarantees that portion of it, government guaranteed, and helps borrowers qualify for a good interest rate, which is always good, right? SBA backs a portion of that loan, does not offer the loan directly to the individual. Loan amounts typically go up to 5.5 million, caps based on industry. And it provides great mentorship. You have that access as well to have that guidance, which is always good. We want to continue on. SBA offers different loan products. If you take a look here, so if we go over everything, it's pretty much there should be an avenue or an industry that you would fit in, or a loan program, that you would fit in. So maximum loan amount available, 5 million, fully amortized, government guaranteed. Loans are offered for working capital, expansion, equipment, 10% down payment by borrower, 90% bank loan. That is that basic 7A loan program. Then there's the 504 loan program. Again, maximum loan available is 5 million. Loans are offered for maybe owner-occupied real estate acquisitions, construction, or heavy equipment purchases. It is 10% down by borrower, 40% CDC, and 50% bank loan. And then on the veteran side, it would be maximum loan available is 350 and guaranteed fees waived, business operational for at least 1 year. So it had to have been in business for a year. line of credit or fully amortized loan with a partial government guarantee, expedited application processing and quick turnaround, and loans are offered for working capital, equipment, business acquisition, real estate purchase, or possibly a facility expansion. And the down payment is as low as 10%.
I have a question about down payment. Does your company allow a customer to use real estate assets in lieu of a cash down payment?
Gabriel, can you help out on this? So real estate in lieu of cash.
No, we don't. We won't cross collateralize. We won't use, I guess, another property as a down payment, to make another purchase or anything like that. We will require a cash injection.
Okay, thank you.
Alternative sources of funding, so nonprofit funding organizations, community development financial institutions, CDFIs, work at a community level to provide business mentoring, financing, and technical assistance for borrowers who may not qualify for traditional loans. Many lenders have special programs for businesses as well owned by Native Americans, women minority groups, and people who are economically disadvantaged. So I want to say they're still around, but I know like one popular, and Shayla, you can even add on because you're more into this kind of source here, would be like Lift Fund would be a good one that, it's a nonprofit funding organization. They guide you, they put you in alternative sources of funding. They review your business plan and all of that. So that's one that I know immediately off the top of my head, because I know that they're a community partner of ours that we've worked with. Okay, so in summary, so creditworthiness for small businesses is measured using the 5 C's, which are the character, capital, capacity, collateral, and conditions. If you're running a new or small business, it's likely your business won't have much of a credit history, so lenders will rely on the business owner's personal credit report and score when deciding whether or not to approve loans to your business. In order to apply for small business credit, you may require a variety of legal and financial documents, and we are here to help and guide or anything that you need. We have the experts here. We can share some info if you have additional questions. I appreciate Shayla, you for bringing me on to facilitate this workshop. If you are a small business and stick with that vision, that passion, and go for it, and reach out to us if you have any additional questions.